Thank you. Good evening and a warm welcome to our third quarter FY18 earnings call. I'm Nimish from the Sun Pharma Investor Relations team. We hope you received the Q3 financials and the press release that was sent out earlier in the day. These are also available on our website. We have with us Mr. Dilip Sanghavi, Managing Director, Mr. Sudhir Walia, Full-Time Director, Mr. Kal Sundaram, Full-Time Director and CEO India, Emerging Markets and Consumer Healthcare, and Mr. Abhay Gandhi, CEO of North America. Today the team will discuss performance highlights, update on strategies and respond to any questions that you may have. As is usual, for the ease of discussion, we will look at consolidated financials. Just as a reminder, this call is being recorded and a replay will be available for the next few days. The call transcript will also be put up on the website shortly. The discussion today might include certain forward-looking statements, and these must be viewed in conjunction with the risks that our business faces. You are requested to ask 2 questions in the initial round. If you have more questions, you are requested to rejoin the queue. I also request all of you to kindly send in your questions that may remain unanswered today. I will now hand over the call to Mr. Sanghavi.
Welcome and thank you for joining us for this earnings call after the announcement of financial results for the third quarter of FY18. Let me discuss some of the key highlights. Sales for the quarter were at rupees 6,598 crore, a degrowth of 14% over the same quarter last year. The decline is primarily driven by the US business. All our other businesses have grown for the quarter. In line with our EBITDA margin guidance, our overall performance for Q3 reflects a gradual improvement in EBITDA margin over the first half of the year. This is despite a challenging US generic pricing environment and continued investments in building our global specialty business. I will now hand over the call to Mr. Walia for discussions of Q3 performance.
Thank you, Mr. Sanghavi. Good evening, everyone, and welcome to all of you. Our Q3 financials are already with you. As usual, we will look at the key consolidated financials. Q3 sales are at 6,598 crore, down by 14% over Q3 last year. Material cost as a percentage of the sales was 31.8% higher than Q3 last year, mainly due to year-on-year decline in INR sales in US as well as higher cost of goods for Taro. Staff cost was at 20.8% of sales, higher than Q3 last year. This increase is purely due to expansion of the specialty team in US and consolidation of employees' costs of the Byzantex acquisitions in Russia. Other expenditure was at 26.2% of the sales, similar to Q3 last year. As a result of above, the EBITDA Q3 was 1,398 crore with EBITDA margin of 21.2%. Adjusted net profit for the quarter was 878 crore, down 40% over Q3 last year. Reported net profit for the quarter was at 365 crore, down 75% over Q3 last year. Reported net profit was adversely impacted by one-time deferred tax adjustment of 513 crore related to the changes in US tax rates. Reported EPS for the quarter was at 1 rupees 50 paisa, while adjusted EPS was 3 rupees 70 paisa. Now, we will discuss the 9 months performance. For the first 9 months of this year, net sales were at 19,355 crore, a decline of 17% over 9 months last year. The material cost as a percentage of the sales was 29%, which was higher than 9 months last year. The staff cost for the first half was at 20.8% of the net sales, while other expenses at 30.5% both higher than the 9 months last year. All this increase were driven by loss of exclusivity in US, lower profitability for Taro, and challenging US generic pricing environment. As a result of the above, EBITDA for the 9 months was 3,767 crore, a degrowth of 50% over the 9 months last year. EBITDA margin were at 19.5%. Net profit for the 9 months is 853 crore, which are two large one-time which has impacted the net profit. One of them is 513 crore one-time deferred tax adjustment related to changes in US tax law reported in Q3, and the second is 951 crore settlement impact related to the modafinil antitrust litigations announced in Q1 this year. Excluding both this one-time impact, the adjusted net profit for 9 months period is 2,316 crore, with a net profit margin of 12% compared to the net profit of 5,741 crore for the 9 months last year. The net profit for the 9 months last year included the benefit of 180 days exclusivity of Inatimi in US, which expired in July 2016. Let us now briefly discuss Taro's performance. Taro posted Q3 for FY18 sales $156 million, down 30% over Q3 last year. For the 9 months, sales were USD 487 million, down 29% over 9 months last year. Taro net profit of Q3 was at 18 million, down by 87% over Q3 last year, which includes 38 million deferred tax adjustment related to the changes in US tax rates. Net profit for the 9 months was 125 million, down by 67% year on year. I will now hand over to Kal Sundram, who will share the performance of India and emerging markets.
Thank you, Mr. Walia. First, let me take you through the performance of our India business. For Q3, sales of branded formulation in India were 2,085 crores, with a growth of approximately 6% over Q3 last year and accounting for approximately 32% of our total sales. As indicated in our previous call, sales in the current quarter are not comparable to periods prior to GST implementation. The current financial year is a transition year for Indian pharmaceutical market due to implementation of GST, and hence the industry growth for the full year is likely to be muted. However, for us, the underlying demand for our products continue to remain strong. Sun Pharma is the largest pharmaceutical company in India and holds approximately 8.5% market share with over 116,000 crore pharmaceutical market as per December 2007 AOICD AVAX report. As per latest SMSRC report, Sun Pharma is ranked number 1 based on share of prescriptions with 11 classes of doctors. For Q3, 16 new products were launched in the Indian market. As indicated earlier, our near-term focus will be normalizing and continuing to grow our business post-GST regime. For medium to long term, we'll strive to achieve profitable sales growth with focus on productivity improvement and building strong brands. Let me now focus on our performance in emerging markets. Our sales in emerging markets were $189 million for Q3, with a growth of 10%, partly driven by acquisition of Biocentis in Russia. Emerging markets accounted for 19% of our total sales. The growth is broad-based amongst emerging markets. There was a minor positive impact of currency movement on our growth in emerging market for the quarter. Now I'll hand over the call to Abhay. Abhay?
Thank you, Mr. Kal. I will briefly discuss the performance highlights of our U.S. businesses. For Q3, our overall sales in the U.S. were down 35% at $328 million. accounting for approximately 32% of our overall sales. The main reasons for the year-on-year decline in our U.S. revenues include pricing pressure due to customer consolidation, lower generic imatinib, and authorized generic sales and delay in approval of new products from the Halol facility. We expect changes to continue in the network dynamics for reaching the products from the manufacturer to the patient. During the quarter, we commercialized generic Corec CR in the U.S. market. As of now, we are the only generic approved for this product. Let me now update you on developments in our specialty business. During the quarter, we announced the U.S. FDA acceptance of our NDA for our dry eye candidate, OTX-101. This marks a step forward for our specialty ophthalmic portfolio. We started marketing Odomzo, our specialty oncology product, in the U.S. some quarters back. Some months back, we had announced the approval of a new label for Odomzo by the U.S. FDA, reflecting sustained duration of response for 26 months. We are in the process of ramping up this product and are leveraging our dermatology field force in the U.S. for co-promoting this product to dermatologists. For tildracizumab, we continue to expect the BLA approval in U.S. in FY19. In the near future, we will be participating in the AAD conference in U.S. and will be presenting 12 different oral and poster abstracts for tildracizumab. I will now hand over the call to Mr. Shanghvi.
Thank you, Abhay. I will briefly discuss the performance highlights of our other businesses as well as give you an update on our R&D and specialty initiatives. Formulation sales in the rest of the world markets, excluding US and emerging market, were $120 million in Q3, a growth of 6.4% over last year. ROW markets accounted for approximately 12% of Q3 revenue. We continue to focus on developing and utilizing APIs for captive consumption for benefits of vertical integration. For Q3, the external sales of our API business were at 370 crore, flat over Q3 last year. We continue to invest in R&D for enhancing our pipeline. Consolidated R&D investments for Q3 were 373 crore, accounting for 7.2% of sales. This R&D spending enables development of future product pipeline, including specialty and differentiated products. We have a strong pipeline for the U.S. market with 126 ANDAs and 4 NDA awaiting approval with the U.S. FDA. For the quarter, 4 ANDAs were filed and 5 approvals were received. The number of ANDAs pending approval has reduced slightly as compared to Q2 since we have dropped certain non-viable projects. I am also pleased to inform you that we have recently commercialized Odomzo in Germany, the first European country in which we have launched this branded oncology product. And finally, on the FY18 guidance, we continue to expect EBITDA margin in the 20 to 22% range for the first half of this year. R&D investments are likely to be slightly lower than our original guidance of 9 to 10%. Our 9-month revenues have recorded a decline of 17% year-on-year. We expect our Q4 revenues to be similar to Q3. With this, I would like to leave the floor open for questions. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We will take the first question from the line of Manoj Garg from HealthCo. Please go ahead.
Hi, happy Valentine's Day, everyone. I have a few quick questions. One is from our channel checks. Can you confirm whether the FDA is re-inspecting halal this week? Two, on the U.S. business, can you give us the degrowth numbers Xing out imatinib, so for Q3 of last year and Q3 of this year? And lastly, it's our understanding that McKesson is back in the market with doing another round of RFPs, and maybe if you can elaborate on what impact that might have to the business. Thank you.
Yeah, about, I think, halal, as a policy, we don't respond to the regulatory inspections, so I'm not able to respond to the question specifically. Abhay, would you respond to the specific U.S. questions?
I think on the specific U.S. question, if you take out the impact of both the imatinib and the authorized generic, then our sales are much better, and our degrowth is significantly lesser than what you see now. Your question
can you quantify that?
I think you can work it out, and Nimish can later on give you the numbers if you wish. But
okay.
It's a completely different picture if you remove these two products.
Okay.
McKesson is, of course, a very specific question, so I don't want to respond to a particular company. But in general, you're right. I mean, the pricing pressure continues for us across all the buying groups, not just one.
Okay. So on the ongoing pricing pressure that you're seeing across the U.S. buying groups, is that somewhat quantifiable?
It's product specific, so it's difficult for me to give you a number on a consolidated basis. But I think our overall performance reflects the pricing pressure that the business is facing.
Okay. All right. Thank you.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Just trying to understand this other expenses SG&A line better. So we have seen both YOY 14% decline and Q&Q 17% decline. What is leading to this? Is there a forex element or is it the new base?
On the other expenses, what you have seen in the current quarter, there is a combination of certain cost improvement initiatives and also with some element of forex impact.
Could we know the forex impact, sir?
Normally, we do not get into specifics on the FX impact.
But if you could just help us, so there would be some increase in the other expenses line, and this is not the base. Is that right understanding?
So overall, based on what I said earlier on the cost initiatives, it will be trending down, and there are many moving parts in that. So specifically, we do not want to comment on FX. But overall, I think it's a trending moving downwards.
Understood. And second question on the U.S. business. So if you look at Q&Q ex Taro, assuming 90% to be U.S. sales, we have seen some improvement. This could be due to the deferment of sales you mentioned last quarter, or is it the base business and, I mean, as you said, Coreg has come in. So it's largely due to that, or there has been element of deferred sales as well?
So, Abhay, maybe you can respond.
Yeah. No, I think in the environment as any business should, I mean, we look at individual products and see whether there is an opportunity for us to improve our share of the business. And at an aggregate level, therefore, you see the kind of numbers that you do. So it is not a one-off. It's a team trying to compete in market and win as many accounts and products as possible.
But would we have recouped some of the deferred sales which we missed last quarter?
Most of it, yes.
Most of it has been recouped. Okay, thanks. I'll join back the queue.
Thank you. We will take the next question from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my question. Sir, if I were to look at your U.S. sales movement quarter on quarter and then look at your gross margins, the gross margins seem to have declined very sharply. Taro seems to be a very small part of this. Could you please help us get some color on what led to this, decline in gross margins on a sequential basis?
Should I take this question?
Responding. Murali is responding.
So it's a combination of what you saw, Taro, material cost increase, and also product mix. So that's what I would cumulatively the impact what you're seeing in the gross margin for the quarter under review.
So then it's fair to assume that this is the new base for our gross margins.
For Taro, we cannot say beyond this.
Beyond this, it's difficult.
Whatever is the public information.
Okay, then if I were to ask this question, ex Taro, is this the new base for Sun Pharma?
So what I would say is that we are not saying that we're resetting the margin. What we said is that Taro we have seen, and the other margins we said there's a material cost increase and a product mix. Right.
Yeah, I think you have to recognize that to respond to a new material cost, I think depends on the specific products that we would have sold. Yeah. Hopefully, our focus always is to find a way to improve the EBITDA.
Okay. And second, on the R&D question, on the R&D line, that seems to have come off, for the last 2 quarters. Is it some, deferment in projects? Why have we slowed down, R&D in the last 2 quarters? Or are we, re-looking at R&D? Has something changed to, for the cadence to change so much?
So we are relooking at part of the generic R&D, and once we have clarity, maybe we'll share that with you. But what you see also here is let's say, slowdown partly is a result of reduction in the cost of the Tildra clinical development cost, because product has been filed and safety studies are kind of getting closer to getting over. And the new studies that we have started, they haven't yet fully ramped up. So as I see, there is a certain amount of lag before it again starts going up.
Got it. Thank you so much, sir.
Thank you.
Thank you. We will take the next question from the line of Sayan Mukherjee from Nomura Securities. Please go ahead.
Yeah, thanks for taking my question. Sir, is it possible to indicate, currently what percentage of your R&D is on specialty business?
So we are not splitting the R&D between generic and specialty at this point of time. I think, and we don't plan to do that at least immediately in next few quarters. At some point when our specialty R&D business builds, then we will start giving more specific information.
Okay. Sir, on the specialty investments that we are doing, which is, you mentioned, reflected in employee costs and other expenses, as you get closer to, Tildra approval, how should we think about these expenses for next year? You think it can go up substantially, or you see a marginal increase? How should we model this?
I think since that's next year's we will possibly come out with a much more clearer, expected costs on those at the time when we share the guidance. Because there is a certain amount of build-up cost which will be factored into the guidance that we will share with you. But also you should know that a large part of the Tildra organization excepting a few people, or most of the people are in place.
Okay. Okay. And just one final question, if I can. I was just looking at the IMS data. It shows a very significant drop in Absorica prescriptions. Do you agree with that? And if you can throw some light as what is happening and whether it will have any impact going forward?
Abhay, would you like to respond?
So we have made a significant correction in our copay program. So although you see a loss of prescription, which is correct, but it will go down to what you would have seen almost a year ago or slightly better. And clearly that will mean a more profitable sale of Absorica.
And so that number, the change that you implemented and the impact you're saying is not meaningful from a net realization perspective is what you're mentioning.
Yes.
It will mean a more profitable business.
Okay.
Clearly.
Okay, got it. Thank you. I'll join back to you.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, thank you. Just one clarity on that other expense. I know you're not quantifying, but you can just help because, 300 crore drop in other expense in a quarter on a base of 1400 crore EBITDA is a very significant number. Can you just help at least the FX element you're talking about? Is that sub 50 crore, sub 100 crore? Some idea, will be helpful. Otherwise, it's impossible to forecast in future.
No, it's a meaningful number, is what I can tell you. But it's not the only number.
But Dilbhai, if you can help with the sub 100 crore number, should I take a more than 100 crore number I take?
So let's say that if we decide to share this number, we will share it with everybody. But as on today, neither I think we have it here or give a decision level. And I recognize the challenge that you and all the other analysts will have, because you have to also predict the future profitability and cash flow of the company. So you need to understand the new normal.
Okay. Just a second question on Odomzo. I just want to understand that versus your targeted formulary coverage, where are we right now? Have we achieved formulary coverage for most of the insurance companies right now?
So for Odomzo, as I see that because of the nature and the size of the product, the formulary coverage is not a major challenge. It's likely to be a major challenge both for OTX 101 as well as for Tilra. Odomzo, that is not a major challenge. And also what we recognize is that the IMS sales is not a clear predictor of the success in marketplace. So, but Abhay, maybe would you like to share anything more?
No, I think you have covered it. And in any case, what you are referring to as formulary coverage is a moving target, and you never feel you have enough. So you keep moving up and keep trying to improve it. But broadly, I think I will echo what Mr. Shanghvi mentioned as an answer to your question.
So just wanted to get some clarity on this. So, Dilbhai, can you just elaborate then what's the challenge here? Is pricing the challenge or number of reps supporting it's the challenge? So is it like, let me simplify my question. Is it only a function of time before Odomzo ramps up, or do we need to change our strategy or put more resources behind Odomzo right now?
Abhay?
I think the large part of the sale that you are seeing today comes from the oncologist. And like we have also mentioned that we are trying to leverage our derm field force to improve our coverage, and therefore the output and the prescriptions we get from the derm. So that's the next stage that we are working on. And going ahead, we hope that that will help us to improve sales of Odomzo more than what you see today.
So, sir, have you already started pushing it to dermatologists?
In the current quarter, yes, we have started.
Okay. Thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Hi, thanks. Good evening, everyone. Just on the previous one, Abhay, do you think which would be the bigger indication for Odomzo? Would it be onco or derma? And is onco reasonably, saturated, or do you think even that part can go up a fair bit?
Indication is the same, whether it is for the oncologist or for the dermatologist. But I think logically, the dermatologist prescription should be higher at some point in time than the oncologist prescription, because long term, the patient is more likely to reach out and stay with the derm rather than with the onc.
Okay. And
Samir, I think you also have to keep in mind is that average number of patients per dermatologist will always be much lower than the average number of patients per oncologist. So the focus, limited number of doctors giving you large amount of prescription is likely to happen with oncologist.
Okay. And sir, on Tildra, when is the PDUFA date for this?
It's end of March.
Okay. And a fair expectation to get it approved in the first cycle review?
No, actually, I think we have consistently announced, Samir, that this is something which Merck has filed. So we are aware, but entire interaction with the agency is being handled by Merck. So it's difficult for us to respond.
Okay, one final one, sir, from my side. Given the size and the importance of Absorica in our overall U.S. business, what's the competitive outlook for this? When do you think we should expect the generic? It'd be one settlement or more than that also coming?
Yes, Dilip, please.
No, I think what you call, typically Samir, if you see most of the settlement which is there with the first to file generic, which I think we have announced the date, subsequent settlements will be only after that.
And there's none that you have done, so...
This is what we have done, we have announced.
Okay, got it. Yeah. Thank you. I have a few more. I'll get back in the queue. Thanks.
Thank you.
Thank you. The next question is from the line of Surjit Pal from Prabhudas Lilladher. Please go ahead.
Thanks for taking my questions. Dilip, given that more news is coming on channel consolidation among the big players in US, what is your view about state of headwind in terms of price erosion? And do you think we are coming to the end of this cycle, or do you think that it will continue and it may intensify going forward?
Yeah, Abhay, I think would you like to respond closer?
Actually, Surjit's voice was very faint to me, so I'm not sure I understood the question.
Yeah. See, basically what I'm saying is that given that, the more news flow is coming among the league players or among the channel partners are, thinking of consolidating further. So given the current state of the price erosion, do you think we are coming to the end of this, this price erosion cycle, or it could continue to go on at a current rate, or it may intensify? What could be your call for, say, next year, year and a half?
I mean, it's a question I ask myself every day, and I'm sure everybody in the generic business does the same, but I have no clear answer. From a day-to-day perspective, I'm not seeing the pressure reducing.
See, if you compare, say, 6 months before and now, do you think that it has come down? Because some of your competitors from India is talking that, they are observing that, that intensity has come down in terms of price erosion.
No, Abhay indicated
generalize is difficult.
Yeah, but Abhay, you also indicated that it's all product specific. So I think it's
product specific, exactly. So there are products where I think the pressure has come down, and there are products where I think it has not come down. So it's very product specific. So
and also there
I
are
don't want to give you an aggregate answer on this.
Yeah, products where we are seeing people coming out of the market because products are not viable anymore.
Sure. The other question is that in your SGA cost, given the kind of ramping up plan for specialty portfolio as well as some of the India product also in lineups in next 2 to 3 years time, do you think that current base of 20%, 19 to 20% of SGA cost to your sales, or 20 to 22% will be enough, or do you think this cost may increase initially as a build-up cost?
So that's what I said, that when we give next year's guidance, we will give some clarity.
Okay. Thank you.
Yeah, thank you.
Thank you. The next question is from the line of Abhishek Sharma from India Infoline. Please go ahead.
Yeah, thanks for taking my questions. Sir, in the last quarter, you had mentioned that your Tildra filing in EU, the European agency was expanding scope of clinical sites under review. So, do we have any updates on that regarding its resolution or any further delays, or what kind of work is going on there?
No, that review is continuing.
And does that change your timelines to file in the EU? Not file, sorry, to get an approval.
So that we had announced, that it will delay the approval.
Right. And any further delays to what you had earlier indicated?
No, nothing beyond what we announced last time.
Right. Sir, I mean, just from an understanding perspective, I mean, is it something which has expanded ever since you announced, this last quarter, or is it still, what you had expected when it began?
I think when there was something that was likely to impact approval, we announced. So if there is, let's say, a further change, then we will announce.
Right. The other one is on Absorica. Question to Abhay. Given the fact that we are now reducing copay support, if I understood this correctly, does that risk patients switching to isotretinoin generic? Given the fact that similar generic alternatives are available in the market?
Before we took that decision, we had done a modeling of what we think we will expect to see, and I think we are trending along the lines that we expected. So sure, that little bit of a risk is always there, but I think the idea is not just to have a large prescription base, but to also have a profitable prescription base.
And does that also risk alienating some of your channel partners like pharmacy chains, etc., who would prefer a better copay system?
I don't think they expect a better copay system.
So it's just related to the patients, and that's something that you modeled in?
Yeah.
All right. Thanks.
Thank you. The next question is from the line of Manish Jain from Sage One Advisors. Please go ahead.
Yeah, hi. Dilip, I just wanted to know on Tildra, till what stage do we need to keep taking support from Merck? Is it just restricted to getting the approval and the ongoing clinical trials for additional indications, or will they play any role on the marketing side as well?
So I think, Manish, what we have announced is that the filing for the US will be done by Merck, and since they would have, if the BLA is filed by them, up to the approval, they will be actively involved. The initial supplies for the market also will come from the Merck till we, let's say, relocate manufacturing to another supplier. For the purpose of the marketing as well as promotion of the product, I think it's a Sun product post-approval. So there is no active involvement from Merck for approving the promotional material or supporting marketing activity as a part of the contractual agreement. We have good relationship with Merck so that if we wish to consult them or if we wish to take their view on whatever that we want to work on, I think that at least we've been able to access that input from them.
Thanks. And typically when one is looking at a product like Tildra, what can we look at as the launch period cost? Where should we assume 6 months, 12 months, 18 months, broadly?
So my view is that if you call launch, or I would call a investment phase, where typically you will spend more than what you will sell, I would say anywhere between 2.5 years to 3 years is what you will achieve, depending again on the product. Some products will start responding much faster, so that launch phase may be 1.5 to 2 years.
This is very helpful. Thanks. I'll join back the queue.
Thank you. We will take the next question from the line of Ashish Khandelwal from Bear Consultancy. Please go ahead.
Hi, just wanted to know what is the total debt? Has it been added in this quarter or has it been reduced in this quarter?
Nimish, if we don't have the number, maybe post the call you can share the number.
But it's not so significant.
Not material.
Not material.
Still we share it up.
Sure.
It's a routine business activity.
Yes. There is no significant change.
We must have paid something back.
We have in fact reduced.
Because we had more money with the funds, mutual fund for liquids.
We have reduced our borrowings, but we can share the details.
Thank you.
Thank you. The next question is from the line of Alok Dalal from CLSA. Please go ahead.
Yes, Dilip, my question was with respect to emerging markets. So 3 years post the Ranbaxy acquisition, where you are in these markets today and how you are seeing the next 3 years?
No, I think we are happy with the progress that we've made in our performance in the emerging market. We've been able to rationalize the operations, take away the low margin products, improve the overall profitability margin on the product, streamline the structure, also streamline the internal processes for filing new products in emerging markets. So hopefully that business will continue to grow over next 3 years.
So Dilip, with the initial phase now behind, is it fair to assume that you will grow faster in EMs on a constant currency basis than what you've done in the last 3 years?
We don't give 3-year guidance, so I think you're asking for a longer period. But yeah, I think philosophically, our view is that emerging market is an important and good opportunity for developing a profitable growth business.
And is it possible to share the sales split in EMs? Ranbaxy used to do that in the past. Can Sun also give those numbers?
Country by country, you're saying?
Yeah, the key markets.
Currently we have no such plan.
And any comments on the profitability in these markets? 3 years have passed, so how is the profitability in these markets?
So I think many markets which were, let's say, marginally profitable or loss-making have become profitable. So I don't think at a budgeted level or even at operating level after providing for corporate overheads, there is any market in which we actually lose money.
Okay. Thank you. Thanks for taking my questions.
Thank you. The next question is from the line of Nimish Mehta from Research Delta Advisors. Please go ahead.
Yeah, thanks for taking the question. First on the U.S. business, you mentioned that we have recouped some of the sales of second quarter in the third quarter. So does this mean that the actual sales for the third quarter is lower than what is reported? And if yes, then how should we look at it? And what is the baseline sales that we should look at?
So Abhay, would you respond?
So I think you are probably better off looking at it as what we have done in Q4, as Q3 rather, is similar, a number that we can achieve in Q4 as well.
I think so, but that intuitively means that Q2 sales has not been recouped because then this becomes I'm just trying to understand what, maybe a question from Q2 now, but why was
your question also assumes that in existing products or other products we won't improve in the next quarter.
Okay, understood. Okay, fair point. The second actually is on the sales guidance that Dilip were given about low single-digit decline, high single-digit decline, and now we are heading towards almost high double-digit decline. So, has there? Is it? I'm trying to understand. Is it because only of Taro, or is it also because of something else? So, if you qualitatively can tell us, what is the reason why it is not meeting the guidance? Is what I'm trying to understand.
Oh, I think if you do mathematics, then it's not high double-digit decline. At the most, we may miss the guidance marginally.
Sir, the 9-month decline is about 17%. So we are talking about high single-digit decline, which means
I think there's no sense in discussing this on phone. Maybe you're looking at different numbers. I'm looking at different numbers. Resolve this with Nimish subsequently.
Okay. So we are likely to meet the guidance. Is that a fair understanding?
No, I said that we might miss the guidance marginally.
Marginally. Okay. Okay, thank you.
Thank you. Next question is from the line of Ashish Thakkar from Motilal Oswal Securities. Please go ahead. Ashish Thakkar from Motilal Oswal Securities, your line is unmuted. Please proceed with your questions.
We can take the next question.
Sure, sir. We have the next question from Charulata Gaidani from Dalal & Broacha. Please go ahead.
Yeah, my question pertains to, you made a mention that you have dropped certain non-viable projects. I wanted to know if you could quantify them, and how have you taken it, as an impairment or as a part of lower R&D?
So typically R&D is fully charged, so there is no need to take any impairment. The second issue is that this is after evaluating whether the product, if approved, is something that is attractive enough for us to launch or not, and whether it will recover the subsequent investment required for getting the approval of the product. So that is the reason why some of the products we would have dropped.
How many? How big would it be in terms of whatever has been spent so far?
I'm not able to respond. It's not a big number, but and also it's not a material issue as a percentage of R&D cost.
Okay. And my second question pertains to there have been certain withdrawals from the U.S. market by Sandoz and Teva. Do you see the situation improving because of this?
No, I think market will continue to dynamically readjust to pricing pressure as well as relative attractiveness of different products. So, and that's likely to be the new normal. As I said, that there are products where we are seeing price changes upward because of the market dynamics. But I'm not able to respond to specific products.
Okay, fine. Thank you.
Thank you.
Thank you. The next question is from the line of Rahul Sharma from Karvi Stock Broking. Please go ahead.
So one thing, have we withdrawn certain other pending ANDAs like what we had done the preceding quarter because of the changing competitive landscape?
Yes, Rahul, that is what it is.
Okay. So how many would be pending as of date now?
We've given the details, 126 pending ANDA approvals.
Okay, so probably another 10, 15 have been withdrawn?
So we haven't quantified.
But if you do calculation, look at this and also look at new filing which we have also shared with you, then it's easy to do that calculation.
Okay. Can you please rerun on the guidance which you had given? I had probably missed out on certain aspects.
So Rahul, this is Nimish here. In interest of time, probably you can call me after this call gets over and then I'll explain it to you.
Okay. Thanks. I'll get back in the queue.
Thank you. The next question is from the line of Saad Ahmed from ULJK Financial. Please go ahead.
Hi. My question is that we are hearing that next big thing in pharma is venturing out into the complex generics and biosimilars. So I wanted to know what will be the impact of this channel consolidation in US market on these new products which we are venturing out into.
Abhay, would you like to respond?
Honestly, I don't know how to understand the question. So.
That makes two of us. So I think you are asking us to predict future in an uncertain environment. So
the only reason every pharma company is bleeding is the channel consolidation and other effects. But if we are moving into something which is newer, so we must know like how will that impact the complex generics and all, because biosimilar is the most difficult part. So if we rule out the biosimilars and look at complex generics and specialty molecules, so how does that go on for the future?
One thing you have to keep in mind is that attractiveness of a product is a function of how many people are competing for market share. Multiple is attractive, however complex it will be.
Okay.
But beyond that, I don't think we can respond, in the sense that if the complex generic that we are working on day one, if there are 4 players, then it will not be attractive anymore.
Okay. Okay. Thank you very much.
Thank you.
Thank you. The next question is from the line of Dinesh Pathak from Goldman Sachs. Please go ahead.
Yeah, thank you for the opportunity. Sir, I think I heard that you said that formulary coverage is not an issue for Odemzo, but might be for Tildra and OTX. So, can you just compare and contrast like what characteristics does Odemzo have and the other two don't have, so that formulary coverage will be an issue for one and not for the other?
I think it's simply the size of market and the
Size of market, sorry?
Size of market. I think somebody is making noise.
Dinesh, it's coming from your end. There's some airy disturbance. If you're on hands-free, you will need to take that, keep that off.
I'm not on. I'm on headset. Is it better now?
Yes.
Sorry, sir. Go ahead.
So this Odomzo is a small product in a disease which affects relatively small number of patients. So that is never under significant scrutiny.
Essentially, it's not a very tightly managed formula in the space that it competes in. But psoriasis or dry eye will be a tightly managed formulary. So one will have to work towards winning your place in each of the formularies one by one.
Okay.
So it will happen over a period of time, and it's not necessarily going to be very fast. That's what we are trying to communicate here.
Okay. And can you indicatively mention the field force that we have for Odomzo?
You're talking about number of people?
Yes, who are marketing the product in US, both derma and onco.
I mean, generally for competitive reasons, we are not sharing specific field force numbers.
Okay. And sir, lastly, if I understood correctly, we have the marketing infrastructure in place for Tildra, but we don't yet have the field.
Sorry, we missed the last part. Your voice broke off while you...
The field force for Tildra, that is still not in place, correct? Is that correct understanding?
Recruitments are on. It's not in place, but the recruitments are on, and in some places we have recruited. Some we are in the process of recruiting.
Got it. Thank you so much.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, thank you. Dilip, there was a recently doxorubicin recall for us last month. I just wanted to understand, in your analysis, was that limited to a batch? Because the reason of recall mentioned was lack of assurance of sterility.
Yeah, I think it was a failure of certain systems, because of which we had to recall.
But this was very much limited to the recall quantity?
Specific batch.
Okay, sure. And the other question was on the Tildra. For the questions which are asked by EU regulators of extended review, was something of that sort picked up by US regulators? Did they come back to you with some questions related to that?
Nothing that we are aware of.
Okay. And lastly, you have indicated earlier that specialty business you expect as an EBITDA break-even, assuming you don't, let's say, take up any other molecule by FY20. Do you think you still get to around that region by FY20 now?
Right. It all depends on actually how much we decide to invest, because both the products, Tildra as well as OTX-101, are marketing intensive products. It depends on how much we decide to invest on marketing. If we be conservative, then it will break even. If we feel excited about the product enough to invest, then maybe for a few more quarters we might lose money.
Sure. That's helpful. Thank you.
Thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thanks. Dilip, just what are your thoughts on M&A? Are you still on the lookout, and what is it that would excite you?
I think we've shared this with you also in the past, is that we want to develop an attractive product pipeline for developing a global ophthalmology and dermatology business. So those are the kind of products and companies that we are looking at. But I think also parallelly we are focusing much more on execution, including strengthening execution on filing, on approval, on launch, and on maintaining consistency of supply chain.
Okay. And sir, the second question is when your R&D team is working on generic pipeline for the U.S., when you look at the lay of the land over the next 3, 5, 7 years, based on the work being done internally, do you think that this is an attractive market? Do you see there is a fair bit of opportunity as we go forward?
So I think rather than taking a view on the market, there are always attractive products. The percentage of the relatively short period patent expiry is lower now than what it used to be in the past. So to that extent, I think the cash flow will get deferred and it will need to be justified in terms of net present value to recover the investment and make.
Thank you.
Thank you.
Thank you. Due to time constraints, that was the last question. I now hand the conference over to Mr. Nimish Desai for closing comments.
Thank you everybody for joining us on this call. If any of your questions have remained unanswered, do send them across. We will have them answered. Thank you and have a good day.
Thank you very much.